Okay, folks, so we've got lots to talk about. Number one, we're going to go through line by line the catalysts and market events that are going to be occurring in this coming week. Then number two, we're going to go into the hottest plays and overall setups that you need to know before open tomorrow, including a specific 98-cent stock that may be ripe for an increase in the coming sessions. Okay, so let's go ahead and start with catalysts coming this week. So earnings season is effectively over. There's not much in terms of major companies or really small caps that I care about that are reporting in the coming weeks. However, on Tuesday, we have the Twitter vote on Elon Musk's offer to buy Twitter at $54.20 per share, a formal shareholder acceptance vote. The price currently trades at $42, so shareholders do have upside if Musk is forced to buy it for the original offer, but also that involves back and forth and of course highly public lawsuits, which are quite frankly more damaging to Twitter than they are to Elon Musk, especially with whistleblowers and all. A lot of Twitter's practices have been revealed and they don't make Twitter look very good. And on Tuesday, the CPI report comes out, as I like to call it, the Consumer Poverty Index. At what rate is the consumer being pushed into poverty? Last month, you saw that slow down. It came in at 0 month over month and 8.5% year over year, which is just atrocious, but it's at least cooling down very, very slightly, right? And this time it is expected to come in zeroed out again month over month and drop to about 8.2% year over year. The biggest single factor that is driving bulls in this market is really that inflation narrative and the inflation is behind us narrative. And most of that narrative is pinned on one thing, the slight decrease in inflationary pressures that we saw overall in the last report. So again, if this inflation report does not show a continued downtrend in overall inflationary pressures, well, that's not going to be a good thing for the market, especially because it just rallied in the last couple of days. But it is my expectation that inflationary pressures, at least for this coming report, have indeed continued to cool overall because the energy dump has continued to ripple through each line item. However, energy and overall commodity cooldowns are not guaranteed to continue through the fall, and in fact, I would be surprised if they do. Wednesday, you have the PPI, Producer Price Index, out, which is the other crucial data set for inflation. Markets are looking for a teensy tiny drop month over month. Hopefully we get that. Thursday, you have the CFVI vote to take social media website Rumble public. And Friday, you have Triple Witching Day, a day of historically higher volatility because you have stock index futures, stock index options contracts, and stock options expiring all at the same time. It's no quadruple witching day, but it can certainly bring higher volume. Okay, before we move on, let's go ahead and switch over to Charlie with longer hair so that we can hear a word from today's sponsor. But first, a word from today's sponsor, Moomoo, and the up to 13 free stocks that you will get when you sign up with our link down below. So let me ask you this question, folks. Would you show up to the battlefield without the proper weapons? Oof, I wouldn't. No matter how good a warrior you are, you need the proper gear to survive and thrive. And Moomoo is exactly that, a proper trading platform and broker for active traders like yourself. Moomoo is a one-stop trading app that features a comprehensive stock screener, free real-time level 2 data, daily short volume, and allows you to unlock 24/7 premium news for free. One feature I'd like to highlight is their earnings calendar and hub. You can scroll through and see which stocks are reporting earnings in the coming week, and more importantly, get a rapid to the point rundown on what they've reported. For example, here I can see Rivian reported large losses due to accelerated vehicle production and supply chain bottlenecks. Or I can see that Palantir's US commercial revenue grew by 120% year over year. And then I can expand and see more crucial information. It's tools like these that can take your trading to the next level and drown out a lot of the noise. And to give them a shot, they are offering you up to 13 free stocks, and this is only available if you use our link down below. If you just go to their website, you won't get that same deal, folks. And it is the most generous deal I've seen in order to try out a free and powerful platform. Anyways, thank you again, Moomoo, for sponsoring this video. Now back to the content. Okay, moving on to plays. Let's start with APRN. So several weeks ago, we presented on the APRN squeeze setup. It was following the 5th iteration of a cycle of momentum that we've seen in the last 2 years at the same time that short were covering. My thought process was we were looking for proof of concept that the squeeze setup would actually fulfill what needs to happen in order to, well, actually realize a tradable squeezy McSqueezy. And since our video on the 24th, it has had a hero's journey that's taken it back and forth in overall allowed appreciation of 45% to highs. As of the end of last week, it's now broken past each of the previous 3 cycle highs and declared a higher resistance deep into the 8s. Its sell-off towards close took it to support that was was around where the previous highs had been at, which means you have very solid proof of concept in terms of momentum continuing. You pull up the short interest as a percentage of free float is now higher than at any point in the last year, according to Ortex. Interestingly enough, when we last spoke about Mr. Blue Apron, shorts were in the process of covering, which helped start the massive rebound in prices because they have to buy back shares to cover. But since then, shorts have actually decided to reverse course, which is quite juicy, and short interest is around double what it was when we covered it last. It is now at 53% of free float, and it's increased nearly 20% in the last week alone. If that does not make you lick your lips, I don't know what does. That increase in short interest means that the momentum we've seen is actually even more impressive, considering that all of these shorted shares were shares that were dumped onto the market multiple times, right? When you short something, it artificially inflates the supply because you have somebody that owns a stock that you just borrowed it from and you're now dumping it, even though that wasn't your share to dump. You are creating artificial supply by selling shares that other entities own that just have to be bought back at some point. So of course that has a negative impact when you're shorting it, but when you go and you actually buy back the shares, it has a positive impact. If the last short covering period from here to here sparked a more than 3xing in price, imagine what the next wave of covering will do if Apron remains a battlefield in the coming weeks. We have seen substantial evidence that Apron can spike massively when shorts are closing their positions profitably. Imagine how much Apron can spike if they get squeezed. So what is my take? Well, the most bullish thing Apron can do heading into this week is retain above previous cycle highs and even perhaps sell off temporarily below them before redeclaring above them. We call this further proof of concept. And the way that I look at proof of concept is it's very similar to flirting. If you go up to somebody that you find appealing and you start flirting with them, but they show zero interest in flirting back in the slightest bit, then that means that the odds of you locking in a date with them or something else is very low. At least it's lower than somebody that does immediately flirt back, right? And it is the same thing with the stock market. If you find a setup that is very appealing, but it doesn't flirt back with you by showing any interest at all in actually moving where you want it to move, then the odds are against you and you should just back off and find another setup that is actually flirting back and showing interest. What pisses me off is a lot of traders will go and they'll look at a stock and they'll go right up to that stock and say, "Oh, you are so cute. Ooh, I want you." And the stock will look back at them and say, "Ew, you are disgusting. Get out of my face, you loser." And the trader will respond by doing what? Throwing thousands upon thousands of dollars at that stock. And they are confused at why they've just lost all that money and why it didn't work out. There are quite frankly many fish in the sea of the stock market. If one is not showing at least a little bit of interest, move on to one that is. Okay, next, the stock of the hour, Mr. BBIG. Now, Mr. BBIG has been a stock that has provided insane trading opportunities quite a few times over the last year plus, but overall it's been a tough horsey in the sense that its overall downward direction has been extremely aggressive. And it's been very barcodey, a Mr. Barcodey McBarcodey as of the last several trading periods, which is generally a disqualifier because it means the liquidity is on the lower side. There's not many orders executing unless you get sort of a barcodey looking chart, which is a problem for two reasons. Number one, you could get stuck in a position that you can't sell out of. And number two, it could be more susceptible to manipulation. However, oftentimes in super small caps, they tend to barcode for long stretches of time. And then all of a sudden something significant happens and volume and liquidity go up dramatically. And for the last 30 days, we've been in a situation where BBIG is attempting to regain relevancy, starting with that mid-August pump. It's had a few other attempts at uptrending, but I believe a bigger, more successful attempt is coming in the next few weeks, and there's a chance it rivals the mid-August one. Why? You look at the weekly option setup for this week, there's a pretty significant concentration in options with strike prices at $1.50 and $2. This is a stock that is currently trading at a penny under $1, right? A penny or two under $1. To have such significant open interest at those strike prices is quite significant because these expire at the end of the coming week and require a more than 50 and 100% run respectively in order to be in the money. Why would people bet on this stock jumping that much in a week? Well, number one, because the probability of that happening has increased dramatically after this random blip in August and after the 30 to 40% rebound attempts. Very few times across BBIG's history have you not seen big rebound attempts in the weeks and months after a massive sudden rally. And number two, because of the proof of concept it showed on Friday. And on top of that, the market makers that printed these options will likely induce a gamma squeeze if BBIG does indeed run this week. They sold options expecting a low likelihood of them expiring in the money. If that likelihood all of a sudden jumps up rapidly this week, they'd likely have to hedge by buying what is currently a low liquidity stock, which means that when you're all of a sudden trying to buy something that's low liquidity, it shoots up the price a lot faster and has an outsized impact on momentum, which then would probably attract more spec buyers that would then cause the price to go up even faster. Now, it's my view that there is a positive setup heading into this week. If it doesn't run this week, I think the setup still looks solid going into the weeks after that, but you want to see what proof of concept. My overall thesis, though, is, hey, it wouldn't take much to move the stock. There's a lot of people watching it after the recent rallies, trying to find and scout out the next rebound rally that takes. And of course, it has a historical pattern dating back a year plus of massive rebound spikeability. You get a massive spike, and then all of a sudden you have rebound rallies, and then you have a big rebound rally or a new and higher breakout. Now, to conclude this particular segment, I know this is a super small cap, so I have to make sure that I'm very clear that we were not bribed to talk about this. I did not receive a back rub from any company to talk about this, although my back is a little bit sore. And of course, we have no position. Moving on, the other stocks that I am paying close attention to and ones that you'll likely see in our ZipTrader U daily morning briefings. Number one, SPPI, which got an FDA approval, a nod of approval in the after hours and saw some running. Will that continue into the week? Number two, Mullen, which is seeing an increase in social media interest, which tends to preclude some trading opportunities. And number three, Ravina, whose setup suggests another opportunity for a hype rally. These are some stocks that are top on my radar heading into this week. Anyways, that caps off today's video. Let us know if you have a stock that you like down below. What do you think about this market? Give us a comment down below and let us know. Thank you again, Moomoo, for sponsoring today's video. Get your up to 13 free stocks with that link down below. If you want to sign up with ZipTrader U, I also have a link to that down below. Have a good rest of your day, folks. Make sure to hit that ravishing like button and subscribe, and we will see you in the next one.